I think that this is a time where it's really sensible to look at owning some gold because we are definitely in a place where holding the gold price here is going to become very expensive. And so I think when people look at what the Fed's doing, the Fed is going to keep raising until there's a panic and until people are having to liquidate these investments that they really never should have bought. And then you're going to see something shift. And when that shifts, I mean, the gold price probably goes nuts.
Gold prices climbed on Wednesday due to safe haven demand ahead of an expected rate hike by the U.S. Federal Reserve. Traders view the fight against inflation as nearing its endgame. The Fed is anticipated to raise rates by 0.25 percentage point, marking the 11th hike in its last 12 policy meetings, potentially being the last one. E.B. Tucker, editor of the Tucker Letter, believes it's a sensible time to consider owning gold because the gold price is likely to become very expensive. He attributes this potential increase to the Federal Reserve's actions, which will continue raising interest rates until there is a panic. Tucker predicts that when this shift happens, the gold price will soar. Throughout history, gold has consistently shown gradual value appreciation, making it a reliable way to preserve wealth over extended periods. While this steady growth may not be as exhilarating as more volatile assets, Tucker emphasizes that the current moment presents a unique opportunity for gold to experience a significant surge in value. In a recent interview, while analyzing the gold chart, Tucker observes that it has attempted 3 times to surpass the $2,000 mark, indicating the potential for an upcoming breakthrough in value. He predicts that during a sustained rise in gold prices, a rush of people will try to enter the gold market. However, big investors and regular folks must show more interest in gold. They are focused on other investment options and do not consider gold. Tucker points out that this lack of attention could benefit those considering gold as an investment. If the trend changes and more people start investing in gold, it could lead to a sudden surge in demand, driving the price of gold even higher. Now let's watch excerpts from E.B. Tucker's interview with David Lynn. Before we start, smash that subscribe button and remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
If you look at the gold chart, it's really interesting because it actually has done great. Like if you go back to 2000 and gold was $300 or something, it's actually done great. If you just, if you bought some gold then, your wealth has like actually been preserved the whole time. It's just the most boring thing you can possibly do because it seems like it never goes anywhere. But that's because it sits somewhere and then it takes a little step up and then it sits there for a while. And now it's time for it to step up into the 2000s. It's really time for that. And so it's sitting right there for the third time. It's trying to break 2000. If you look at the chart, it's 3 times it's tried to break there. So it's a matter of time. And so then it's going to step up over that and it'll be there for a while. And so while everybody's like looking for the next hot AI chip stock to buy or whatever, this market is telling you like, hey, it's a forgotten market. Nobody's interested. And it's time for it to move up a couple $100. And that's coming. And then there's like, what do you do about that? Well, it's what you do is that what E.B. Tucker does is have a gold royalty company. I mean, that's the way to do it, right? I mean, and nobody's interested in the gold royalties. Metal announced special dividend. People say, who cares about that? But you look and you just say like, wow, I mean, who cares? That you want to hear people say who cares? It tells you that you can buy something cheap because when people are really excited about something, it means that you're going to have to pay a lot to get it. So I want to hear people being negative. Look, I'm in that business. I've been in that business. And what shocks me is that when we were out, we have about 80 something royalties. When we were out buying them, the stock was much higher. And now that we own them, the stock is much lower. It's really bizarre. But there's not an institutional interest in gold at this moment. And you have to remember that back in 2011, when those stocks went crazy, there was a lot of institutional interest. And then we had a long bear market and they went on to do other things and they haven't come back. So what that tells you is that in any sustained move in gold, you're going to have so many people trying to come to the gold party that you're going to have security at the door because nobody has been at the gold party for so long that nobody even knows where the gold party is located. Okay. So it's like a speakeasy for gold. There's people who aren't going to know how to get into it. And I know that because I'm in that business and I'm with those institutional investors and I'm talking to them and they're not involved. And so if they're not involved and if the average retail stock buyer is being squeezed, you got nothing.
Looking at recent trends, Tucker emphasizes that several countries, including Singapore, Poland, Turkey, Russia, and China, have been actively increasing their gold holdings. What adds to the intrigue is that some of these countries have been pulling their gold reserves out of traditional storage locations like London and New York. Tucker sees this as a growing demand for physical possession of gold and a desire to diversify away from reliance on specific financial centers. The BRICS nations and other emerging economies have long expressed concerns about the risks associated with excessive reliance on the US dollar and the influence it affords the United States over global financial systems. Tucker believes these countries aim to reduce dependence on the US dollar and establish themselves as credible players in the global financial landscape. To achieve this, they acquire gold reserves and enter into bilateral agreements with other nations, backing their reserves with gold and physical commodities. With the ongoing de-dollarization efforts and increasing interest in gold as a strategic reserve asset, the dynamics of global finance could undergo substantial changes. Let's get back to the interview.
The thing that's weird about gold is, and I'm going to explain this next month, is that it almost has nothing to do with supply and demand. It's really strange. And so, you have the things that I watch, just so you know, is like Singapore has bought, last I checked, 70 tons of gold this year. And Poland's bought a lot of gold, and Turkey's bought gold, Russia's bought gold, China's bought gold. And then what's more interesting to me is a lot of these countries have pulled their gold out of London and New York. That's really strange, I think, is that they've all pulled it out of there and they want it physically. But the average person, they have no idea why they would even want gold. I was just in Japan and I went to a department store. They had a gold section where they were selling all these different gold. It was really fascinating. It was quite expensive, by the way. I was doing the math. It's hard to do the math when it comes to gold priced in yen because the numbers get really crazy. But the price was, maybe 2.5 times the actual physical cost that people, if they subscribe to my letter, have my gold dealer in the portfolio, that the price in Japan was much higher. But my point is, there was a little bit more of an awareness. You would never go into a Macy's and see a gold department. Think about that. Like nobody would expect that in the US. But in Japan, in this department store I was in, they had a gold section. It was pretty cool.
Like, I'm just visually, what does that look like?
Yeah, they had security. Yeah, for sure. Yeah, they definitely had security. There's people kind of watching you, but you could actually go in there and, for like, 100 million yen or whatever, buy this like big pieces of gold and different, they were like stamped with stuff. It's kind of like one-off coins or something. I think people think about that in a way that's like, there'll be like a gold standard or something. It's not like that. But I think what the BRICS, let's call it the global South, because basically it's more than just the BRICS. There's a lot of like countries that are in working agreements with the BRICS countries. And basically what they're doing is they're trying to de-dollarize. And I think what they realize is that for people to take them seriously, they need to have some gold. And so what that means is that, if they have some part of the reserves in gold, then they have the ability to establish themselves as something that can be taken seriously. And it's not all gold. It's just that a portion of that needs to be backed in gold. A portion needs to be backed in some sort of produced physical commodity. And you're seeing this a lot. You're seeing a lot of bilateral agreements be signed. I think you're going to see a lot of these cooperation agreements happening. And what does all this mean? Well, what it means is that the U.S. for a long time controlled the world's oil supply in the sense that all the oil that turned over in dollars, and a lot of those dollars washed back through the treasury market. So there's a lot of this was their 20th century setup, this is how the U.S. kind of controlled the world financial system. And I think you're seeing all these groups try to get away from that. Now, it takes time to get away from that because it's not like some sort of instantaneous thing that you do. It's like a long breakup or something. It takes time, and that process is underway. And I'm not sure that the U.S. thinks that it can stay king of the hill, and maybe it can. I don't know, but I think that this is a time where it's really sensible to look at owning some gold.
The outlook for gold prices appears promising as demand for safe haven assets is expected to increase ahead of an anticipated rate hike by the U.S. Federal Reserve. As the Federal Reserve continues raising rates until they reach a certain point, there might be concerns in the financial markets, leading to potential panic. In such uncertain times, gold often becomes a favored investment as it is considered a safe haven asset. Do the current circumstances and predictions about gold's potential surge in value make it an attractive investment opportunity? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.